What's up, millennials? There might have been some signals that we already have seen the top of the current SPAC market. You have, for example, certain brokers like Morgan Stanley not allowing retail investors, people like you and me, to invest in SPACs. And on the other hand, there's also the SEC getting involved with the whole SPAC situation, now starting investigations into certain SPACs and certain banks dealing with SPACs. In this video, I would like to talk about these potential issues, and I'd also like to give you my opinion about this whole situation right now. So let's first start with Morgan Stanley, because Morgan Stanley, as we can see in this Reddit post that was forwarded to me by a Discord member, that the Morgan Stanley broker is restricting SPAC purchases to clients with a net worth of $1 million. Well, I suppose that many of you, probably all of you, do not have $1 million. And yeah, the original poster asks himself or herself if it's time to jump ship on Morgan Stanley and on E-Trade as well. And then we can see a screenshot confirming that it's actually the case that a person with a net worth below $1 million was not able to buy a SPAC on Morgan Stanley. So what this looks like is that Morgan Stanley kind of believes that retail investors should not be investing into SPACs. They might think that people like you and me, retail investors, are too dumb to start owning SPACs. And I understand what they are trying to achieve. They're probably going to tell you that what they want to do is to protect the retail investors. And I kind of understand that you want to protect the retail investor, but I don't think this is the way to achieve that. What I believe should be done is to educate people on the whole situation on SPACs. I still believe there are a lot of people that lack a little bit of that information about SPACs. People who don't know really what a pro forma market cap is, who just look at the market cap of a SPAC instead of just the whole company that is going to be merging with the SPAC. So these are like small problems, small pieces of information that simply should be taught to people. And of course, people are going to just learn on their own as well. If they start investing in SPACs and if they make mistakes, they are going to learn very quickly from those mistakes they made. So again, don't ban people from owning SPACs, from buying SPACs, from trading SPACs or whatever, but educate them. And this looks a little bit like what we have been talking about in a previous video where I talked about the pipe deals that have been going on. A while ago, I did an interview with Mark Haig, who analyzes a lot of SPACs. And he was talking about these sweetheart deals, as he calls them, that pipe investors usually get to start or get to trade or buy into a SPAC at $10 per share, while the stock is already trading way higher. His example, his main example, was Lucid Motors, without even knowing what was going to happen, because this interview was recorded before the Lucid deal was actually completed. But what Mark was saying is that he believed it was incredible that pipe investors were able to get in at very low prices while the stock was already way higher. In the case of Lucid Motors, the pipe investors were able to get in at $15 per share, while the stock at that same time was already trading at like $50, $60 per share. So the pipe investors simply got a very, very good deal. And this deal, this pipe deal, is only available to people who usually have a lot of money, who are accredited investors, and not people like you and me. What this kind of looks like is the trading clubs from the 17th century. This is a picture of the Dutch stock exchange, the Amsterdam Stock Exchange, which, by the way, is the oldest stock exchange in the world. It was founded in 1602, so that's a fun fact to know maybe. But yeah, they had these trading clubs where a lot of rich people got together and shared their ideas with regards to trading stocks. And now it looks like we are getting back to that 17th century, that we are now gathering people in small trading clubs with a net worth of more than $1 million, and they are able to trade SPACs, but of course not the retail investors, not the people who are outside of this courtyard in the 17th century. But it's also good to see at the same time that there are brokers who are actually trying to help the retail investors, people like you and me. Companies like SoFi of course merging with IPOE, which is a SPAC itself. But SoFi announced very recently, I believe just a few days ago, it was on the 26th of March, so about 3 days ago right now, and they announced that right now retail investors can also invest in IPOs thanks to SoFi Invest. So what you can do is simply go to SoFi, create an account there. I'm not entirely sure how it works, but as far as I can see, you need $3,000 at least in your entire SoFi account, and then you're able to invest in IPOs too. So with SoFi, you first need to make sure that you're eligible, then you need to submit that you're actually interested in a certain IPO, and then when everything is confirmed, you can confirm your buy order. So that's pretty neat to see how that is actually working at SoFi. And what SoFi also does is they are trying to educate people instead of just banning them from buying into SPACs and into IPOs. They try to educate people about IPOs. What is an IPO? How does a IPO price work? What are SPACs, for example? What kind of things are important to know about SPACs? So I really like their way of doing things. At the same time, what we are also seeing is an investigation, or well, a very informal investigation, if you will, from the SEC, the United States Securities and Exchange Commission, of course. And what they are doing is sending letters to Wall Street banks seeking information about SPACs. Okay, so they are looking for just information, basic information with regards to SPACs. But the article goes on and says that this might actually be a precursor into a more formal investigation, because what they say is that the SEC might actually be worried about the depth of due diligence that these SPACs are performing before they actually acquire a company, and also whether huge payouts are fully disclosed to investors, people like you and me, or not. To me, especially, this first point seems to be a little bit weird, because I mean, SPACs usually have 2 years to search for a company, so I can imagine that usually they do a certain amount of due diligence. That was a lot of D's. But yeah, I do think that there is enough due diligence going on in general. I can imagine that there are some SPACs out there that are approaching their deadline of about 2 years, and they are just, acquiring whatever company they can find. But I do think in general, this should not be a problem. The other thing that might be the case, I'm not entirely sure, of course, but there might be huge payouts going on. That is certainly something that would be interesting to know. So what this might lead to is, first of all, that formal investigation by the SEC, and then what might happen is more regulation by the SEC too with regards to SPACs. If that happens, I do think that we are not going to see many SPACs anymore. We are likely going to see a decline in the amount of SPACs that are being started. Right now, we are, of course, in a major correction for the entire SPAC market. This is actually the graph of an ETF, a SPAC ETF called SPAC, S-P-A-K. And this, of course, shows what has been going on in the last couple of months. This graph is from the 1st of October 2020, so almost half a year ago already. And we can see that, first of all, we had that dip, but of course, then in the coming months, in like November until, well, what was this? The mid of February, of course, we did see a massive SPAC boom, but now everything seems to be cooling off massively. Of course, no one knows exactly what is going to happen in the future, but if you want my opinion, I think we might see something like a K-shaped recovery. Basically meaning that from, not sure if that's going to happen from now on, but in the next coming weeks, probably months, what we might see is a K-shaped recovery where certain SPACs are going back up and other SPACs are going down or maybe stay flat. And I think that the SPACs that are going to stay flat or maybe continue going down in the future in the next coming months are SPACs that do not have a certain proven track record just yet. I recently made a video about this with my top 5 SPACs that do have that proven track record, and I do think that those SPACs might actually see a recovery in the next coming months. And what I mean with that proven track record is that certain SPACs already have a proven track record. They already have a certain amount of revenue. They have been in business for like 10 years. They already have a certain product, a certain service. And they're not companies like many space companies, for example, many space SPACs that simply do not have any revenue yet and expect to have some kind of revenue in the future, in a few years, of course, but right now they have nothing to show for. So again, I think that might happen, that we see the good SPACs, the SPACs with a proven track record going up in the future, and the other SPACs with no proven track record maybe staying flat or maybe even going down in the future. And I'm also very curious about your opinion, because do you believe that our SPACs are dead right now? Do you think we are going to see a recovery or not? Let me know in the comments. So yes, I do think that there are signals like the Morgan Stanley issue and like the SEC investigation that we might have already seen the top of the SPAC market. Personally, what I'm trying to do is to find the needles in the haystack, so those companies I've been talking about with a proven track record that already have a service, already have a product, and already have revenue. Of course, I'm not trying to tell you what you should do, I'm just trying to make you aware of the situations that are going on at this moment, and then you can use that information to your advantage to make your own decisions. If you have any friends that are also investing in SPACs, please consider sharing this video to see what they think about this whole situation. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!